Good morning, UPBOptionMillionaires.com. It is January 12, 2015. It's a Monday. I hope you had a great weekend. Stock futures are off to a good start, as well as the U.S. dollar looking at breaking out to highs it hasn't seen since 2013. And if this trend continues, we can look for a move up. Over 100, I was talking about that in 2015 predictions as one of the things that I thought was going to happen. U.S. dollar back over 100. Also talked about the bond market, TLT heading to 140. TLT is off to a great start. This is a great proxy for the bond market. You can see it's up to the 130-107 here pre-market. I'm looking for a move up to 140 before all is said and done this year. And S&P 500 futures are on a tear, obviously since the lows in 2009. But even this morning, had a nice gap up at about 4 a.m. and continuing that move to the upside. And if you look back, it's at levels just prior to the jobs report. This is the jobs report spike and the fall on Friday. We've recovered all the way back to the jobs report. You see, back over that, I was looking at this move up. This is the last move up in the middle of December, an unrelenting rally. And we had a nice spike. It looked like that was going to continue. We're going to get that rally, and we pulled back. If you just look from a longer term perspective here in the S&P 500 futures, certainly looks constructive up to new record highs. And we'll see if that's what happens. Crude oil is going to be an issue. There's a lot of pieces starting to come out talking about the negative impacts of lower oil. Everything is great when the price at the pump is down significantly over the last 7 months. You look in June, all the analysts were looking for significantly higher prices from there. We had conflict in the Middle East. And now that we've dropped over 50%, they look for a continuation of downside. I don't know if that marks some sort of a bottom, but it bears watching. We're hearing numbers. Previously it was $40. Now we're into the 40s. Now it's like 20. You know, who knows? At some point, if we get into the 30s, maybe it'll be down to $10. But just something to keep an eye on, because I think a lot of these energy-related stocks are going to see defaults on their debt, and that is not going to be good. There's an article out this morning from the New York Times talking about how some of these banks that are really tied at the hip with these energy companies are going to be struggling in the months ahead. And there's the energy ETF, the XLE, which is off its lows from December, but looks pretty vulnerable here, and I think it's going to break down. Let's pull up some individual charts here. Twitter. Talked about Twitter January 2nd. Had a nice chart. It was at support here at about $35, $36 a share. I said it was going to head to 40. Came right to 40 on Friday. Right now it's broken a little bit above it. We're 2 hours before the market's going to open for trade. And I'm looking for a move up to 50 to close this gap. And I think it's going to happen. I was also talking about FEYE. We had the fake out on Tuesday of last week. Broke below. You can see this nasty candle down almost 10%. Recovered. The $32 calls I bought we're down to 10 cents. Those ultimately went to over $2 each. So it was a nice week for FEYE call holders, as well as Twitter. DC is broken out here of this bullish bull flag and looks poised to head over the $40 level, just like Twitter. And it's, this morning before the bell, it's at 34, just $6 away. And then we have this move up of this trend line former support resistance back in the summer of last year. And I think once we hit that, we could break out. And if you look, I keep bringing this up. This time last year, this is where FEYE was, and then it spiked up to almost $100 a share before pulling back. So we're going to see a similar move up this time of the year. It's a possibility. Some stocks that I'm looking at this week, MGM, which has been beaten down. This chart looks somewhat bearish here, but looks like it's getting some support at the $20 level. Looking for a move up to 23. Win as well, which has been beaten down. I think it's going to go up to the 190 level, and you can see this beautiful W bottom. Love these W bottoms. They work out so great. Apple back in 2013. May of 2013 put in a nice W bottom and did not look back. So Wynn Resorts, at least to bounce up to 190 if you don't want to play Wynn Resorts because the option's a little too loco. You can get into the Las Vegas Sands. Again, a break 57.50. I think it's going to head to $69. That is Las Vegas Sands. GMCR continues to get upgraded, confined in this wonderful channel. Look for it to go to the top side of this, over 155. Price line has been really beaten down. And you see broke through support. There's another support level here at the 1050 level. If it breaks through that, we could be looking at a move under 1,000, which is pretty wild to think about here. How about Coors? This stock is also breaking down. The analysts continue to try and talk it up a little bit, but if you just look, we might fill this gap here from the gap down to 72.50, but it just looks poised to get back to the lows it saw back in the middle of May 2013 at about the 52.50 level. Same with Lululemon. Off its lows, OTL, I like to say that, but hit support this past summer in 2014, worked its way off it. I don't know, if it doesn't get back up to this level here, I could see it heading back in the middle of 2015 to the mid 40s. A couple more stocks, and then we're going to get going in the chat room. Apple, which had a strong reversal last week off its lows, was a volatile week. You can see it pulled back even in the session on Friday, but if you look at the move it had, it started a week down to 105, had an $8 reversal in 2.5 days. Pulled back a little bit on Friday with the rest of the market, but recovered nicely, and it's up 0.5%. Google continues to get downgraded. You can see the little short-term trend line that it had bounced above on Friday and Thursday. Now looks poised to take it out. It's at the key $500 level. If you look from a longer-term chart perspective, it's breaking down. I like this in 2015, but obviously there's a good chance it's going to come back to the gap up from earnings in 2013. Pretty wild. Which would bring it down to about the 450 level. All right, one more chart. We'll do TLT, which is breaking out. GLD, which is breaking down. It had a nice candle though on Friday, but I think it's going to break down. And finally, GDX and FCX. GDX is bouncing a little bit here off its lows, OTL. Let's pull up the longer term chart there. And you can see it's, to me, it looks very vulnerable. I think FCX really puts a little bit brighter picture on it. You can see it's breaking down. We have this wonderful topping pattern breaking down, and I think it's going to head back to the 2009 lows. It's going to be like a, I don't know, not ANF, CLF is what I meant. There we go. You can see a CLF, similar type of pattern, broken down into almost penny stock status. All right, you PB option millionaires, I'll see you all in the chat room. We have earnings this week. JP Morgan Chase, which I love this channel. I think JP Morgan Chase hopefully pulls back a little bit in the early parts of the week so I can get some calls for a move higher. Wells Fargo reporting earnings this week. Look at that move it's had to the upside. Goldman Sachs, good earnings report could send us back over $200 a share. All right, I'll see you in the chat room. Everyone have a great week, great trading session, and I'll talk to you later. Bye.